Okay, so what we're going to do in this video is we're going to take a look at the cycle envelope charts, and I'm going to go over it with you so that you can get familiar with what they look like and how you might interpret them to help you in anticipating the short-term direction of the trend. So let's start off here. You can see we're currently in the hub. If you don't see this page, you go to the hub and it'll bring these up. And then right here is where we have the cycle envelope charts. Okay, now these envelope charts, just so that you know, are based on the Hearst cycle analysis method, and usually I have these updated every night. On some occasions might skip a night, but pretty much for the last couple of years I've been able to get these up every night. So but anyway, let's just go ahead and just do these one at a time here. You can see that it tells you when they're last updated, so that would let you know how fresh they are. And if you click on all slider right here, you kind of get yourself a little slideshow of each of the markets that we have, that we cover in the membership. And if you want to rush it along, you have these arrows to the left and to the right, where you can simply just click on them and you'll be zipping through them. Or you can go right up here to this menu, cycle envelopes here, and you can just scroll down and choose what you want, like crude oil, for example, and it'll bring that one directly up. And you'll notice that if you go directly to them, you don't necessarily get a left or right arrow, so you'll have to go back to doing it this way. If you go back to the main screen in the beginning of this whole thing, then you can go through the slideshow. And again, you just go to the hub and then just go to cycle envelopes, and they'll bring you back to the main screen here, and then you can go to slider. If you just want to sit back in your lazy chair and have these things flash in front of you, and then you can just stop it if you see something that looks interesting for you. There's nothing other than manually clicking on those arrows that will slow down or speed up the timing between each one of these charts. If you don't want it to keep moving, you just click somewhere in the area there, just so that it would just pause. And then if you want to get it started again, you can just click one of the arrows, move your mouse off the page, and then let it go back to doing its thing again. All right, well, we're going to go from the top to bottom here. So let's go ahead and take a look at the Australian dollar. Okay. All right. Now you're going to see that we have two envelopes. You have a green, which is a more short-term cycle envelope, making its waves down and up. And they all exist within this blue envelope, which is a much longer term cycle extraction here, showing that all these ups and downs that are occurring on a weekly basis can all be enveloped into a longer term cycle. Now, when I look at this, I immediately see that first off, it looks like we're going to be plateauing for the near future here. See, the blue envelope is flattened. It's not giving us an upward indication or a downward indication. So it's hinting here that there's a really good probability that we're going to flatten out or go sideways for a little bit. But within that sideways, of course, you're going to have these small, short-term up and down waves going on. So that's the Australian dollar. If I was looking at this right now, it would look like to me that we could be looking at a period where we might form a little bit of a base. So the downward may be pausing for a while. That's what I get from that. Then if we go down to British pound. Okay, now British pound is being very explicit as to what it appears its intentions are. We have been kind of making a sideways to upwards move recently. You'll notice that the short term has been cycling quite a bit, but overall the longer term pattern has just been a slow up. But now we're in this area here where it looks like we could be looking at a resumption of the downward direction for the British pound. Even though we may be, for the next few days, we could possibly be going up. And we can definitely look at that on on a price chart with our F dates, see what we have for the next few days. But I wouldn't be anticipating the long side here just based on the cycle charts. I would be more biased that it'd be more bearish than bullish. Now, are these charts like 100% predictive? Of course, you know what the answer to that is, right? No. But it is a very handy tool that exposes the cycles that are within, that makes up this price pattern. You have cycles of different magnitudes and frequencies, and when they're combined, they form the price patterns we see on the chart. Now, we can't expose every single cycle that is in a price chart. It's just the amount of math is too overwhelming. And what I've done here is I expose pretty much the easily spotted cycle. And you have the short-term one, and you have the one that's a little longer term. That envelops the short term. So the short term tends to work within the longer term. It's pretty much like looking at a weekly chart and you see the slow waves up and down over months, and then you go to the daily time frame and you find out that it was all over the map, but overall heading in that weekly direction. And so this is basically the same thing. It makes it very simple visually to see what's going on. So right now, if I was to bring this British pound up, I'm going to bring it up on the provisions charting, and I'll switch monitors here. Let's see, come on. Oh, hold on one second. What I need to do is just turn off that one. Okay, so if you take a look, this is the British pound, and you can see where we had the this pattern here, and I have this on the Heikin-Ashi price bar, so let me get that changed to just candlesticks. I could have just left it on there, but there we go. Okay, so here we have this pattern, and normally with a pattern like this, you'll find me doing something like this, where I will, I'll put a line here, I'll put a line here, and I definitely expecting that this market here now is at the apex, and we know that we're going to have to break either up or we're going to have to break down. Well, the cycle envelopes is pretty much extrapolating from this pattern here that this has more propensity to go down than it does to go up. So I would be really, really careful about being bullish in this market in light of that, unless, of course, you see anything that changes that, or the cycle envelope chart readjusts itself and says, okay, I've got more data now, and I think it's going to be more up. I see this long leg of this bar right here. When I see something like this, the long arm of the bar usually kind of points in the direction that it wants to go to. That's how I look at it. So, when I see that, I go, I'm not going to guess it's going to go up because it closed on the higher end. I'm just going to let the market do its thing. I could put the F dates up on here and see what's going on here. Okay, so we had this swing bottom here, and then this swing top here, and then this here, potential swing bottom here. So it could be going up, but you have to be really, really careful because you are going to be countering what the cycle envelopes suggest. And case in point here, we had this weekly swing bottom here. We're expecting another weekly swing for 1014. Take your pick. It could be either one of these two as a swing top or this one as a swing bottom because this is right in the middle. So in this case here, I would be very careful. We may be looking at it to head on down over into this area here before we're ready to start making a substantial bottom for the British pound. So, got something in my eye there. Excuse me. All right, so let's turn the cycle charts back up again. All right, so continuing on here, let's take a look at the Canadian dollar. All right, Canadian dollar, you can see the short term right here is somewhat sideways, and the bias, looking at the blue envelopes, is somewhat bearish. So that's what I read from that. And next one, euro. Okay, euro, it looks like a lot, just like the other ones pretty much, except for British pound. It's kind of flatlining. How about Japanese yen? All right, now Japanese yen is interesting because it is suggesting that we may be looking at a trend change here for the intermediate term. So let's take a look at what the chart looks like for the Japanese yen. Okay, so we'll go back over here. We'll go to the Yenski. Okay, there's the yen. All right, well, we're still in the weekly charts here. It's been nothing but straight down. And I noticed that we had a weekly turn date for 9/16, and if you'll notice, we had this lower swing top right there. So that certainly happened. All right, I'll just put an arrow there for a visual aid. And then now we come down to here to this next weekly F date. And if you'll notice, the bar kind of turned a little bullish for this week. That's a good first sign for a weekly swing bottom. Was it in oversold territory? I'll turn that on. Well, yeah. Okay, so we're in oversold territory here. So we have good probability that, probability that we will be making a weekly swing bottom here. So that kind of goes with the cycle envelope chart. And if we go on the daily chart here, well, this is interesting. Let me take the OBOS off. If you'll notice right here, we had a $ F date, just off by 1 day, this really major bullish bar for Friday, October 21st. Look at that. So, oh, and here's something else that's interesting too. Let's see. Nope, that is this. All right, got it. Okay, so I don't need that. That was a little note for me to keep an eye on the Japanese yen for 1020, and sure enough, 1021, kabama. Okay, has nothing to do with Obama. All right, but there you go. So we had this big bar. So We have a potential weekly swing bottom, and the daily seems to go along with that too. So there you go. If you happen to be looking at the Japanese yen, that seems to be what it's suggesting here. We don't have a trade setup though, so this is just, academic. Just look at it and notice, hey, we got a potential weekly swing bottom here. Either we get a possible higher swing bottom following that weekly bottom with an F date to make it a pre-confirmation buy setup, or the weekly bottom actually confirms and then we get a potential higher swing bottom for an F date for an actual buy setup. Okay, because remember, this still is a bear trend, so you want to respect the trend. That would be my suggestion. There's just way many opportunities that you don't have to go chasing markets like this. And we go to coffee, for example. Okay, another big bear trend for coffee. And, I find it really surprising that a lot of these commodities have been dropping, considering that we're in such a high inflationary period right now. You'd think commodity prices would be going up. But this is due to the fact that, for example, things are priced in U.S. dollars, and the U.S. dollar has been inflated like crazy because of the interest rates being pushed up so much, and so relative to other currencies, it's just been going up. So a heavy dollar possibly could be one attributing factor to why a lot of these commodities have been priced down in the futures market. But anyway, as we can see, there looks like a hint here that we may soon be heading into a intermediate trend change, bottoming here. And short term, we may already be starting to do it. That's what the green cycle is in here. And if we were to go ahead and take a look at the chart for coffee, all right, so the last weekly F date was right here, and we can see we ended up with a correction. We had a swing bottom, swing top, weekly swing bottom, weekly swing top. That was the last one. And then from there to here, he came all the way down, and now we have a potential weekly swing bottom. I have a 1021 plus marked here from my analysis. Says that it could be this bar or next week, and the cycle envelope charts will go with either one. It doesn't matter. If you're curious, are we in oversold territory? Yeah, we are in oversold territory. So indications are good that we should be looking at. Let me get this line out. I don't need it anymore. We could be looking at a weekly swing bottom forming at this time and moving up. We don't have one yet, so remember the trend is still down, so there's no setup here. And we can see that this trend was so strong that it just blew through two consecutive F dates during the week that were really close together. This one is this very top swing. Then it blew through these two. These two were probably supposed to be some minor little hiccup thing, a little pop here and then go straight down. But now we're in this F dates territory. It's in oversold. So we could see a daily swing bottom, but this is not a buy setup. If you read the guidelines, you'll know that. But this puts us on alert to start looking for a weekly and daily swing bottom here. Okay, and we have the cycle envelopes gave us a clue, right, to look for that. Okay, so after coffee, we're looking at, let's see, okay, what happened there? Go back. whoops, coffee, sugar. I keep clicking and I'm not supposed to click. I'm just supposed to move my mouse over it and go like this. But if you click it and everything, then it starts getting a little goofy. So be mindful of that. All right, well, sugar has been all over the place, as you can see here. And it has kind of building up momentum on the upside. And if you'll notice that currently the short term is in a pullback, likely it'll make a short term swing bottom somewhere soon, probably within the next couple of days, and move back up. And this is suggesting that the overall trend in sugar is likely going to be heading up as well. So of course, if you get yourself a swing bottom on the daily chart around this area, it looks like it'd be going with the trend pretty good. If we go ahead and take a look at sugar on the chart, okay, this is the weekly. It's been sideways. It just confirmed a weekly swing top for the weekly F date. So we don't, and by the way, that could be a possible weekly swing bottom. It's all going to depend on what happens this week. If that bottom gets taken out, then it will no longer be in contention, and this will be definitely assigned as a swing top. So be mindful of that. However, with that said, if this right here becomes a swing bottom, then prices aren't likely to move any lower than this, but instead higher. So it's all going to come down to this daily chart right here and what happens for this F date, 1021 F date, cycles 1021 F date 1021. Let's see, we had an F date 17, that's that top. We had cycles 1017. We have a bottom here 1011. So it's been hitting the cycle turns, F date turns, really good. Okay, so odds are it's going to do it again, and it's going to hit this 1021 here. I noticed that I show a dollar sign 1026 and cycles 1026. That looks like it's next Wednesday. All right, so if this rises up to next Wednesday, then you need to be careful if you're long this market, if that's some indication that this market might want to go back down to possibly this 1031, or it could just give you one of these continuation type situations, like for example, you have the market moving in one direction, but then it gives you a possible swing in the direction you want to go. Well, it's very possible, I'd have to do more analysis on this, but it's possible this could go up, and then on 1026 you could end up with, like, let's say an outside bar. So you have now a possible higher swing bottom as well as a possible swing top. And it could be saying, hey, I'm going to pop for even higher on October 26th. So keep an eye on, your cycle envelope chart, see what's going on with that, as well as the price chart and your F dates in order to determine what is likely going to happen next. Okay, so we're dealing with probabilities. Always trade with the trend, buy the higher swing bottoms, sell the lower swing tops, but in the direction of the trend. All right, so cotton. I think cotton is pretty well self-explanatory here. The intermediate trend and the short term is we're going down. Okay, so cotton looks like it still wants to go lower. All right, so let's go on to crude. Now, crude, I put out a forecast that crude was likely to go up until October 25th for the short term. According to this, it looks like crude is going to likely go up for a little longer than the short term. So let's go ahead and take a look at that, because I happen to have been buying into this market this last few days and in and out, in and out. So I picked up some good coin. I got out a couple of days ago because it looked like it was pulling back, and I'm so glad I did, because it went all the way back to the entry area. All right, so let's go to crude oil. Even my wife's retirement, I help her trade her retirement account, and she likes to, whenever I bring out one of my forecasts, she goes, hey, get me in that trade. So we got her into a couple of, we got her into USO. It's an ETF for oil. So she bought a few of those, and I think each one of them made 100 and something each or whatever. And then the run looked like it was exhausted. So I told her, I says, you know what? I don't think we better hold on to these. We should just go ahead and get out. And because it's going to go back down for a little bit. I don't think it's going down completely. I think it's going down for a day or two, and we can just pick it up again at a lower price. And so she did. And I did the same thing. I did it in the retirement account and my trading account. And I got out, I was in the crude futures, in options for futures, and I was in options for USO, and so was she for USO, was options. You don't want to buy a stock or ETF. We trade options on stocks, or we trade options on futures. We like to sleep at night and not worry about a disaster happening when we wake up. I've seen enough of that in my 40 plus years doing this. So options options are great. Is if you want to, I like to go really, 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 really deep in the money. That and I like to pay as little as possible on time value, which they call extrinsic value. I pay very little on time value by going so deep, where your delta is, if you know anything about options, where your delta is in the 90s or higher. You subtract the strike price from the actual price, and then you look at your option price, and they should be really close, meaning that you're only paying a tiny amount for time. And so from that, you don't have to worry about time decay, which is called theta. You only have to be concerned about direction. And just to qualify that, there is another thing you have to be concerned about, is that if you buy options and you buy during a high volatility period, you are paying a higher premium for your option. But if you make sure that you're paying in other words, the option you're buying is so deep in the money that you're technically buying the strike, or the premium is almost all intrinsic value, then even such a thing as a volatility crush becomes less of an issue, because come expiration, you're going to get your extrinsic value back. As long as your direction is correct, you're going to get your extrinsic value. All right. What the crush will do, a volatility crush, you buy high volatility, and then the volatility, drops in the market, right? The value of your options drop, because what's dropping is the time value, the extrinsic value. It's inflated during high volatility, okay, implied volatility. So something to keep in mind if you happen to be an option trader, and You know, maybe sometimes you're right on direction. You go, hey, I use Rick's F dates. I'm always on the right side of the market, and my options keep getting hammered. Why is that happening? Well, you're learning the hard way. You know, you have to eliminate that, but it's going to cost you. And what it's going to cost you is you're going to have to use up a little more of your available funds, which of course is going to lower your returns. Basically, I mean, I can probably do a whole options course for you guys, but and I seem to be turning this into an options course, and I apologize for that. We'll get back to the cycles, but just really quick, uh, you know, the more you pay for an option, all right, that's the money you've set aside for that trade, and that's the money you're risking for that trade. Now, if you're right, and you got to remember, if you're right on direction and the market goes in your direction and you're really, really deep in the money, you buy really deep in the money, 6 months out or more. I buy months out. And just so I could strip as much of the theta out of it, the extrinsic value, I don't want time to work against me as a long option buyer, okay? Um, you if you're in that, remember, if you're buying an option and they're $5,000 each, well, you've tied up that money that you could have used for something else. You're tied up 5,000, and if you make, let's say you make $500 on that option, okay, you made 10%. Now, if you paid $500 for an option and made $500, that's 100%. So the cheaper options, if they make money, you have higher returns, but your risk of that option losing value is higher too. So for me, as a conservative trader, I'm very conservative. I'm really risk adverse. I prefer buying an option for $5,000. One option for $5,000. So they're $5,000 each in a market such as the SP, like the SPY, for example, or the there's another one that I do. It's the X. It's like the XP. Oh, I can't even remember, XPS or something. Anyway, but they're SP 500 ones. I like those. The Qs, the SP, the SPY, whatever. If you're going to pay $5,000, $6,000 for one that's 6 months out, and you got a delta of 90, 95, whatever. However, even though you're risking $5,000 an option, you don't have to let it go down $5,000 an option. You can put stops on them. You can say, hey, I'll risk 30%. You see? So you just have to get your mind straight that the beauty of an option is that if you buy a I'm going to just talk about one option. You buy a $5,000 one option in the SP 500 that you're expecting to go up. These days, probably expecting to go down. But anyway, that you're expecting to go up, and then all of a sudden, for example, you go to bed or whatever, and then some bad news comes out. Yeah, you could lose 5,000. That's the maximum, but it won't wipe your account out. You see, whereas if you're out there with these, you're out there with straight stock, you're going to lose more than that because, I mean, you got to think about it, okay? Whether you're doing stock or stock options, you've got to have a stop loss. You just have to. But the beauty of it is if you don't think about it and you don't do it and you don't put a stop loss, at least you know that the worst that can happen to you is what you paid for the option. It just allows me to sleep really nice knowing that I don't care how bad the news is, you can be war, whatever the case may be, and not that I'm callous to those things, I'm just saying trading wise, that I know that I don't have, next day I got to start selling my cars, or I got to sell the house, or I got to, so you feel pretty secure in that respect. Okay. So, but then usually you can keep an eye on it. You you know if it goes below this swing bottom or this goes above this swing top, you go, well, okay, I'm wrong. Direction's wrong. Just get out. Don't hope for it to turn around. Anyway, enough lecturing on that. Let's get to crude oil here. Okay. And that's why I got into the option things, because that's what I was doing in crude oil last week. I was I was trading a lot of options last week in crude and having a good old time. If you'll notice here, this swing bottom in crude, we had this respects to here at a higher swing bottom, not respect to this, but respect to here long term. It was a pullback. It was right here at the support level. It just, everything was like, hey, see it hit this oversold zone right here. We had the F date right here. And my cycle analysis work said that we should see a swing bottom on 1018. And so confident I was of this that I uploaded a video on 1017, I believe it was, on YouTube telling everybody, that 1018 going up. Okay, that's what I love about F dates. It's just the level of confidence of what the market is likely to do. So my wife and I, we went ahead and yeah, if you're wondering, did we wait for it to confirm a swing bottom? Completely honest on that, no. When I suggest to you that you should confirm that swing bottom or swing top, okay, I have to assume that you're not, for example, your confidence level in cycles and swings and whatever is not the same as mine, or your risk management may not be the same, or whatever. There are just too many different trading types in the membership that I have to give you the safest way to do this, and that is, you wait until that confirms. You see, it didn't even confirm the very next day. It took 2 days, and then the day it confirmed was the day it decided to make a swing top and go the other direction. But the thing is that, until it confirmed, you really don't have any idea if it's really going to make that swing bottom or not. Personally, I was 95, 96, 97% so sure that I even made a video. I put myself out there. I've been putting myself out there since the 90s on the forums, pretty much stating to the whole world, oh, that's going to make a top. That's going to make a bottom. You put yourself out there, and if you're wrong more times than you're right, you're going to be walking around with your tail between your leg, and you're going to have egg on your face, and you're going to be embarrassment of the trading community, the whole bit. So my level of confidence in my work, in the cycles, and the whole thing is so high that I look at that and I'm like, yeah, I don't mind telling everybody exactly what I think. And, most times I'm right, sometimes I'm wrong. And if the only videos you ever watch of me are the ones when I'm wrong, I'm going to look like a duck. But, it goes with the territory. But anyway, as you can see here, we had a $ F date that made this major top. And you can see I had cycle indications, everything here. These are notes that I put in all my charts. I said 1013 pop. It turned out to be a 1014 right there. You kind of pop, and then it went back down. I knew that was going to happen. And when I say I knew that was going to happen, please don't take that the wrong way. Only God knows something's really going to happen. When I say I knew that was going to happen, that means that I had a very high confidence it would happen. It didn't mean that I actually, this angel appeared in front of me and said, Rick, I'm going to tell you what's going to happen tomorrow. nor do I read chicken feed or any of that stuff. So anyway, um, so that happened as I expected. Came down here, made this swing bottom as I expected, and so my wife and I put our money where our mouth is, and we just went ahead and got in. The next day, this thing juiced up. Yay! We had some good profits. We left it in overnight because there are options. We can do that. Then this day it went up, up, up. I'm watching this 5 minute chart. I'm seeing this thing, RSI's cresting over. I'm watching MACD. I got, watching all the pattern and everything. I don't have a play-by-play everything. And I says, this puppy here is cresting. Let's get out. Got a hold of my wife. She got out of her trade. I got out of mine. We pocketed the coin that was made from that. And then we watched it go down and close low for the day. And then notice right here, we had this F date. And in this F date here, it says, oh, darn. I was looking at this thing and going, man, we're going to have a lower swing top here. So it's like lower, lower. I'm like, we might be going down to 1025. And then I got up really super early in the morning. I was going to throw out this post on the forum and say, hey guys, just kind of an FYI that, if you're long this thing, because you would have gotten in this day if you had gone with the guidelines, or you would have got in when I did if you've probably been a member for 20 years plus. We have members go back 25 years. And, you're comfortable and you got in early like I did. And you're way up here too, and you saw this. So I thought, you know what, I better say, hey, watch out for a possible inversion here. But then when I was writing the post thing and I'm looking at this going, wait a minute, what am I talking about? This thing here, it could just simply be building. It's in the same pocket as this F date. This F date can relate to this bar and this bar equally. So this could be just the correction, right? And so then I deleted that post. It's ridiculous. I was expecting this thing to go to 1025 before, just because I wake up groggy and I see this thing and I'm thinking, So anyway, I left it alone. And this day here, we just said, and I'll tell you exactly what I was telling my wife. I says, let's just stay out for today until we see that the intraday has pretty much bottomed out and it wants to start resuming. And so I just watched it go sideways all day Friday. It's like, it was so annoying on the 5 minute. I waste so many hours staring at the intraday chart. But I didn't want to miss it if it pulled back enough so I can get it at a discount to continue up. So come Monday, I'm going to start the day by looking at the intraday. And what I would really like to see is some of these oscillators like the RSI or the MACD or something pull back low enough to where it looks like, okay, it's as extended on the downside as it's going to be. It respects this low right here. If it goes below this low, then forget it. It's done. But it never challenged it. Look, it just stayed right over here. So I'm going to try to get it again here. I'm going to, of course, buy another really, really deep in the money 6 months out option in the crude oil. So it was like 5-6 grand. I can't remember exactly. 7 grand. Just buy those. And then I'm looking at 1025. Well, Monday is 1024. So what I'll likely do is I'll likely take a look at it, and hopefully it'll start to close more on the upside of Monday. And if so, I will liquidate my options then, because 1025 is probably going to be like make its top, reverse, and go down from 10.25 down to 11.1. As you can see, that's the notes that I have here. Okay, so, but what we were talking about here is, it looks like here that that we're really looking at this thing starting to go back up again for crude oil. That's what this is telling me with the blue envelope. See, whereas the green is kind of like lollygagging around. I was really hoping that we would have seen more of a just keep going straight up, but instead we get this pullback here. So two wasted days, just showing that it's not that strong yet to the upside. But anyway, I'm going to try for that. Come 10.25, yeah, I'm going to look at that and see what kind of opportunity that might bring, especially if it's below this high right here. Okay, if it's above this high, I'm not touching it, because the trend is making higher wave highs. So this is the reason I'm trading this, is because it's above this larger wave. So I was going by the larger wave, not the tiny little thing here. All right. I hope that makes sense. Okay, let's get back to the cycle envelopes. And we want gold. So what's the story on gold? All right, well, looks like gold is ready to make a short-term rise. And we also have the potential to start doing one of these. See that? So we may be flattening out here. Let's take a look at the charts on gold. I don't know if I have any notes on that. Nope, but I have a lot of trend lines. Tells me when it breaks, it broke this, it broke this. So definitely was a good short. No, I didn't short it. I always just put these lines up when I'm analyzing. I'll leave that one on because that was proving as really good support and resistance here. So that will prove to be good resistance likely in the future. So I'll leave that there. And the F dates. What do we have in F dates? Well, we have this lower swing top here. Are we still in daily? Yes. Lower swing top for this F date. And then right here we had the pause formation. Okay, so that's where you get an inside bar and then it continues in the original direction. So you had a pause setup. So you had the sell setup, a pause setup, and now you're down here and you have a potential swing bottom or swing top. Looks more like, obviously looks more like a potential swing bottom because of how strong that bar is, but just to be technically accurate, it's an outside bar, so it could be either one. And was it an oversold territory? I'll bet it was. Let's see. Yeah, sure enough. Okay, so oversold territory. And that's a double bottom. Potential double bottom. Look at that. What was the low? The low was 1621.1. All right, so we'll go to the weekly chart. Yep, save. Okay. So we have a weekly F date right here, which takes into account this bar that made a weekly swing top. And this one here, we can look at it as a potential weekly swing bottom, double bottom, possibly. And is that in oversold territory? I'll bet it is. Yep, sure enough. So this has good potential of making a weekly swing bottom, but right now we have no buy setup just yet. Unless you want to go off of that, that's up to you. You can. Those of you with most experience in F dates, you know exactly what to do. If you trade this, just keep an eye on that low. It has to hold. All right. That's your risk. Your defined risk is right here. This price bar is your defined risk. The range is 42. Okay, it's 42. So that's pretty good. You got 1621 to 1663. Yep, that's 42. So $42. All right, an ounce. And the cycle envelope, yeah, cycle envelope saying, hey, we may be looking. Now, here's something that I'm going to explain to you. You'll notice that often the turn itself usually tends to precede the actual envelope by a bar or two. This one is kind of occurring right at the center of it, which is good. But this in itself, if this goes up and does this, this blue is, you see how far ahead this blue is? It's way over here. Well, this could easily be representative of this area here. It's just projecting out forward. So you could be looking at this intermediate bottom forming right now. And what will happen is if this does go up, this blue most likely will adjust to fit that envelope and then project out again. All right, so keep that in mind, guys. So you may have an opportunity here. Just be mindful that it's not technically a buy setup, but it looks like a pretty good double bottom possibility there. I'd have to do some more analysis on that, see what cycles say. All right, silver. There you are. All right, now silver, same thing. Look at silver. Short term, looks like short term cycle swing up. Looks like that's a cycle swing. Cycle swing up, cycle swing up. So it looks like it wants to do one here, but also it seems to be looking at likely that we're going to have one of these big blue bottoms here, like this one here. All right. So we won't look at the chart on that, but that looks like what we got going in silver. I hope as I'm going through these, you're starting to feel real comfortable with these cycle envelope charts. I will always look at these charts before I start analyzing it on the price bars. I like to see the price bars confirming what I'm anticipating. Now, we have just been climbing up here very gradually in live cattle. So you can see here, I was just about to comment that every time I go to buy a big old slab of beef, you know, I'm under the impression that it's going up a whole lot more than what we see on these charts. But we've been going up, and you can see that the intermediate cycle wants to start topping and moving back down again. And the short term is still pushing up. It closed really strong on Friday from what I could see here. But it's at that time period where the cycles are anticipating that this is where it would be due to pull back down and perhaps start making this larger top here. So let's take a look at the price chart of live cattle. Oh, that's just been a really, really strong push up in live cattle. And by the way, peeps, look at this. 1014 was the ultimate bottom before this thing launched. 1014. The dollar sign F date was 1013. It was just one bar off of telling us that we had ourselves a really good turn here. So if you caught this, congrats. This would have been a really nice one. This is definitely higher swing bottom. See this? Higher swing bottom. Okay, you wouldn't have shorted it because it would have been a higher swing top. Always stick with buys on higher swing bottoms and sells on lower swing tops. And if you had, even if you had followed the guidelines right here and you bought right here, that is just sweet. Now, you may have been like warned of this F date right here, 1018. Well, this is where you can put your stop there so you don't just get out and let the market do what it's going to do. You can either put it right underneath or you can let it go back 38%. You give it that much room in case it just wants to correct before going back up. but instead it just blew right through it. When you have a market that does something like this, the short-term cycles don't have a chance because this is part of a longer-term cycle. And if we go to weekly, let's see what was up with weekly. Okay, so the weekly swing turn was right here for this F date. Okay, this bottom. This one here formed a lower weekly swing bottom, which I would have been very concerned on a long term. But for short term daily, you can trade them as long as you have a potential weekly swing bottom, and then you have a potential a daily swing bottom. That's called a pre-confirmation buy setup. So you would have had a daily setup off of a potential weekly swing bottom, which happened, but it did not confirm until 2 weeks ago, right here. And now let's see, week 1021. Now notice the next one is 1028 plus. So I'm anticipating a weekly swing top to be in week 1028, or it could possibly move over into week 11.4. So you want to be very careful, be very mindful of that if you're looking for that top. So it's basically suggesting that this thing will likely continue. Now, we don't have an F date here, but we have a potential higher swing bottom here. But if you go back to the cycle envelope chart, it wants to, this is saying that it wants to start making its top. So this is virtually signaling that we could be looking at that weekly top, sometime next week. And then that would really satisfy this right here. And the next one is lean hogs. Lean hogs. Oh boy, look at that. All right, so I think that's pretty self-explanatory too. So lean hogs short term has been or is still bullish. It looks like it's ready to peak right here. It's ready to peak now. And it looks like that this peak is associated with the longer term peak. So whatever peak we have here is likely the longer term peak. So it looks like that not only live cattle, but lean hogs may be looking to peak next week. Let's take a look at this on the chart. And we can see here, okay, again, we have a weekly swing bottom to confirm for this weekly F date right here. And then we have a weekly F date for this one right here. And we'll probably likely be like 1 week late. If this is strong, we'll be 1 week late right here. So if live cattle and hogs decide they want to go in tandem, they'll both be next week. And if we go to daily, okay, well, it went and nailed this support area in the squares. I'll get rid of it now because it's already blown right through it. We don't need it anymore. We'll get rid of that. Save. Okay, now look at how interesting this is. Let me get rid of this trend line here. Okay, this thing shot up. It only pulled back technically here and here in this whole thing. But notice that this was the only day that it tried to pull back between here and here. That happened on an F date, showing how the short-term cycle called for it to pull back, but the longer-term cycle says, forget you, you're insignificant, and just blew right through it. I love it when I see like a bunch of green like this. There's one little red, and it's right where the F date is. So it tells a story right there. And then this one here, you can see, you're probably looking at it, go, it blew through that too. No, it didn't actually. It made a swing top. It's right there. Okay, 1 bar later, it made the swing top and it pulled back and then it went back up again. Now, if I had another F date right here, okay, it'd be like I'd be hearing it. Oh, the F dates are too close together. You know, how can you use these as too close together? Well, you know, that's what the market did. They're close together. How else are you supposed to report that? So sometimes, you know, if I see them too close together, like they're within, you know, a day apart or whatever, I'm going to put one in, leave the other one out, and basically just kind of hope they both happen within the same one, because it, you know, people get confused too easily, you know, because they're not as accustomed to it. So um, we see that it had a pullback. It's great. And now we're coming into the next one that for Monday. So this is one bar within, but we might get another one here, and then it go down. So we're looking for a weekly swing top to happen here. Look, we got resistance right here, double top situation. I'm gonna put a line on there. Press the space bar so that it puts that line in there. All right. Whoops. Okay, so anyway, there's the next resistance for here with the potential weekly swing top here. So yeah, so lean hogs is topping, live cattle is topping. You know, the F date cycle envelopes, they tell us the story. They tell us in advance what's going to happen. You gotta love it. All right, what's next? SP 500. This is another market that I traded last week. I hope I don't hear it like, wait a minute, I didn't see any kind of, you know. If I hear it, I ain't telling you guys anything anymore. All right, down, where was that? Let's see, are we in daily? Okay. All right, so when we made this little puppy right here, I believe that's 1013. Was that the one, or was it 1017 right here? I think it was this one right here. 1017, yeah, the Geo and the 1013 is here. We had this, but I gotta remember. I can't remember which one it was, but it may have been this 1017 or 1013. One of these. I went ahead and I bought a really deep in the money option on the S&P 500. You know, this market is clearly in a bear trend, and it's going to go down even more. I mean, this thing's going to get hammered. But I was looking at the cycles here, and it looked like, hey, you know what? This is going to be a nice little push up this week. I think I even said something. If you look in my market analysis, you know what? Let's go over there and see if I even said anything. Okay, we're going to go to market commentary. All right, so we had, okay, I said we had a pre-confirmation buy setup. There was the 17th, I said that. Okay, so that is right here, right? And you'd be up here right now. Or I wrote something about Larry Williams cycles, SP 500 forecasting. I think one of these I actually specified. Oh, by the way, I included Larry's video in here if you want to check it out, what he said. And then I talked about how I forecasted the very bottom of the S&P 500 in 2003. But within one day, I said this is going to be a major S&P 500 bottom. And this is an old forum discussion where people were actually, you don't see me talking, you see them talking about me and referring to, they were laughing and making fun. They go, you know, can you imagine, boy, Rick really messed up, you know, he was off a whole day from the S&P 500 bottom. So obviously they appreciated that I was right on the money there. But anyway, I get into this long conversation on the cycles and how I feel that the bottom is more likely going to be next year than this year. But if you come down here and I'm showing the S&P weekly chart here. Okay, we'll look at it in a second on the in real time. But And then I'm pointing out October and next March on the monthly. But do I say anything about next week? Let's see. Okay, in the previous post, I stated I expected a DSB for FD 1011, still an impossible rally. So far today, we simply an inside bar. What is that? Oh, okay. Okay. I'm expecting F date 1014 to likely be a lower time period, meaning I expect a rally here to be very short. Okay, so from 1014, I'm expecting so basically, oh, I'm talking about F date 1014. Okay, likely to be a lower time period, meaning I expect a rally here to be very short. Okay, so do I say anything about the week? I thought I mentioned the week. Let's go back to another one. Oh, right here. Mentioned in a separate, well, I say I mentioned it in an earlier post. We just have to find it. You can find it. That I expect this week to be a bullish week. So I'm telling you right here that I expected last week to be overall a bullish week. And yeah, I would say so, wouldn't you? Okay, so I definitely made money in that one too. Um, so that means I get to eat. I get to eat this week because Papa made a couple of dollars. And here's 1013. Sure enough, it pulled back on 1014, gave us another opportunity in 1017. You see I had 1013 Geo, 1017 Geo. Geo is on the F dates application itself. The Geo analysis is on the very top of the F date software for those of you licensed for that software. You know what I'm talking about. For the rest of you, just trust me. It's just one of the F date tools, and I write them as Geo on here. If I was to bring up, let's see, F dates 2009. Geo is this top tool right here. It says Geo Waves. This is algorithm 2. This is ACS, annual cycle swings. There's nothing in here because I'm not running any calculations, but this is part of the F-date application that that I use to calculate your weekly F dates. Okay, and then we had a $ F date. That's a different application altogether. 1019, and take a look at that. Okay, 1018 by just a couple of ticks, and it moved down all the way until Friday, where it made a higher, well, it made a lower low, but it's a potential higher swing bottom compared to here, and it's within one bar of, look at that, $1024. So we have the potential for here for, and we got 1024, 1025 Geo, 1026. Basically here, this could be a swing bottom, or we could be looking at this going to 25, 26. Okay, 25. And you can see I got more little codes here, tells me what I use to calculate. And what I'm going to do is I'm going to expect when this thing gets up to 10, 25, 26, and I'm going to look at it, I'm going to look at resistance. I'm going to be looking at all that stuff, and possibly, I haven't done an analysis on it yet, but it may be a shorting opportunity. I would prefer doing shorts in this market rather than longs, even though I have just finished doing longs in it. But I would prefer shorts because I am super, super bearish the stock market. Look at this. The weekly chart. Lower, lower. Okay, this one here changed the trend to upper. And then when it came back down again, it reverted back to lower again. So when it went past this swing top, this little part right here changed the trend back up again. But because this thing started to make lower swing tops, and it even took out this one and this one, we're right back down to a bear trend again. So it was only a bull trend for what, 1.5 weeks. It had only gone back to bull for 1.5 weeks, and everybody on the news was going, "Yay! The bottom is in. The bottom is in. We're going up. Yay!" Yeah, that there was a bear trap if you ever saw one, I tell you. So it's really good to get comfortable with with swings and the relationship to previous swings. I tell you this from years of watching this stuff. Trust me on that. But anyway, so we ended up with this swing bottom here, yes. So I saw that, and that's why on the daily, when I had the daily, I had the weekly, it was obviously deep inside OS territory. You got the 200 simple moving average here that it's finding support off of right now. So this thing is bouncing up, but look, you got another F date right here, 1028, 1028 Geo, 1021 wedge, 1028 11.4 weekly F dates, which is the W dates program. So, you're going to come up to this trend line maybe right here, and then you're going to sell this thing, just sell this thing. All right, so anyway, and I'm going to look at oscillators too and all that stuff, but I'm just saying right now, just looking at price action patterns, I'm just remaining bearish right now. I don't see the any kind of significant bottom going to be put in here. Larry believes the bottom's in. Larry Williams believes the bottom's in. He says it's up, up, and away from here. He's the $2 million man. I'm not the $2 million man. And I'm going to contradict. So you go with whoever. I'm still aiming for next March right now myself. So you can read my post on that in the market analysis. Hopefully you guys visit the market analysis, the commentary area regularly. I have been posting like a storm in here recently. 17, 14, 12, 12, 11. Lots of 11s, 7, 9, October, October 6th, October 4th. So all through October, pretty much just been posting like crazy. And nobody else is leaving any comments or questions or anything. So I'm having a conversation with myself, it feels like, in there. But anyway, hopefully this will encourage you to check out some of these posts that I put in here. Oh, by the way, here's an S&P discussion with updates a day before the Larry Williams thing, and that might be the one that I actually mentioned the week was going to be bullish. Says 10.30 for potential lower DST. Yeah, okay. I don't like it as a sell setup, which is a good thing. And look at cycle. Oh, wait a minute. You guys aren't even seeing what I'm looking at. Sorry, let me bring it there. Okay. Anyway, S&P discussion includes updates. There we go. I'm sorry, I didn't switch the screens and I'm yapping. But look, I have a cycle chart in here since we're talking about cycle envelope charts. And notice what I'm showing here. The short term and the intermediate term turning up for the S&P 500. And here I was saying, yeah, we have a potential lower DST for 1014. However, I don't like it as a sell setup, and we've already just saw on the chart that it would definitely not have been a good sell, but it was definitely a nice buy, which I took advantage of that. It says 1011 is a DSB, and sure enough it was. And okay, I wish I could find exactly where I made. Okay. Oh, and I warned here in the S&P chart, we had a bullish divergence right there. It says bullish divergence. You can't see it, but this price bar is down to this line here. So you have this sloping here, but you have this sloping here. And so sure enough, that happened because it's technical analysis, and technical analysis works if you know what you're doing. All right, let's get back to the hub, and let's get back to the cycle envelopes. I love trading, guys. I really do. I've been at this thing for so long. It's just, it's fun. It's not fun if you lose, but it's fun when you're making money on it. So we want to keep this fun by following common sense. All right, and I'm hoping to teach common sense here. Now you want to see something. A new member was inquiring about why, at least from what I gathered in his question, he seemed concerned the difference between the F dates for the S&P 500 and the F dates for the Nasdaq, that they weren't in lockstep with each other. And if I got that incorrect, he can email me and tell me I didn't get that correct. But that's what I gathered, and so in my reply, in trying to help this person get familiar with F dates, and he has a certain way of thinking that he brought into the membership with him that a lot of you brought into the membership, and there was unlearning that had to be done. So I'm trying to get them to understand that, yes, you have all these F dates, and it might be overwhelming. You're like, what am I going to do? I got an F date here, and I got an F date here, and I got an F date here, and I got an F date. Well, yeah, because the market literally goes up and down, up and down, up and down, up and down, up and down. So you're not going to have one F date here and then a bunch of up and downs that happen in between and another F date way over here. You get something close to that if you go to the weekly chart and you got a weekly F date here and a weekly F date here. You can take those two weekly F dates, go to the daily chart, and say, well, there's your big old span. Ignore everything in the middle. There's one way to do it. Okay, so the thing is that, I pointed out, well, if you really look at the swing tops and bottoms of the S&P 500 and the swing tops and bottoms of the Nasdaq, sure, a lot of times they turn on the same days, but not all the time. A lot of time, but not all the time. So you're going to have some differences between the two. And this cycle envelope chart pretty much lays that out, because this doesn't even have anything to do with F days. This is pure Hirsch cycle analysis. This is a cycle, mathematical cycle, detrending software that extracted this out. The formulas extract this out. Has nothing to do with F dates whatsoever. And look at the pattern. That is what the Nasdaq looks like. And then you compare that to what the S&P that we just saw looks like. Okay? Do they look the same? No, they're similar, but do they look the same? No. Okay? They're two different patterns. Two completely different patterns. So otherwise, when you switch from one to the other, it should be as if I never even changed. That I never even switched. In other words, you should be able to look at the S&P and go, oh, that's the Nasdaq. But it's not. Okay? It's completely different. So that's one thing here. Now notice this one here, it's ready to go down now. It wants to go down now. See that? It says, I'm done, and we need to continue the bear right now. This one here is looking to has more of a lift up and then continue back down. Now this right here, remember what I told you, 1024, 1025, folks, right here. Okay, I hope it doesn't go above this, because I want to buy some deep in the money puts. And I want to ride this thing down a little bit. So let's keep our eyes open for that. All right, the bonds. I think the bonds are telling us that Powell is going to keep on pushing those rates up, because this is just going down, down, down. And here's the thing too. You see how this is so strong down? This short-term turn up might be nothing but a blip. It may not even be as big as this blip. See? Might be just a one-bar blip. And then it's going to continue down again. So you have the short term, that's the green, but the longer term, that's the trend. Okay, so, to make it easier, I should say, basically just trade in the direction of the blue channel. That's one simple way if you want to stick with the trend. Or just, put a 20 and a 50 MA moving average and just trade when price is above both. Be bullish, and when the 20 is below the 50 and the price is below that, then look for sell setups. There are so many ways to trade F dates. It's just like whatever you're comfortable with. All right, here's corn. Corn is pretty much blah, sideways. Soybeans. All right, not a lot in soybeans, but overall, soybeans is sideways to mildly bullish. You don't even have to be an analyst to be able to read that. See this here? Short term sideways, long term sideways overall. So the grains are starting to flatten out a little bit. Maybe going to start trading in a range for a while. So I don't see a lot of great opportunity there unless you want to, sell put spreads here and buy call spreads here, credit spreads, and sell credit spreads. When a trend just goes sideways like this, you can sell options, like condors, butterflies, things like that, and just make sure they're high volatility so you can get some good premium for them. I used to do that. I don't do it so much anymore. I like just going with directional. I'm too much of a directional guy to sit and watch markets go sideways. It drives me crazy. All right, well, that's all of them. The Forexes are basically just a repeat of the futures up here, so I'm not going to go through that. All right, well, hey, I hope this very long video was instructional for you, and I hope to be able to make a couple more in the near future, but for right now, let's go ahead and wrap this up. Thank you so much for watching, and if you have any questions, as a member, please, my door is always open. Just email me at rick@amazingaccuracy.com or rick@fdatesforum.com. I read and answer every email that I receive. Always have for the last 26 plus years operating this membership. And I want to thank you all for being loyal members. And, I'll catch you next time. Hopefully before I'm super old and gray. Talk to you later. Bye.